Hi, Adam Peterson here, coming to you from the digital studios of Market Club. Welcome. And today we're going to be looking at a very popular market, a market that's had a lot of publicity and a lot of action, and that's gold. And we're going back all the way to 2002 to give you an idea of where this market has come from. You can see back here in 2002, we're trading around just below about the 200-300 level. And we've had a very steady run up to where we are today, trading at 1278, which is a new high for the move, and it looks like it's going to go higher. But first, let's take a look at some of the important moves that I see that has happened in the past. And I want to measure a couple of things that stand out to me. One is this one. I want to measure from this low that's right here to this high that's right here. And that's going to take us, I think that works out to be about $566 for the move. So from this low to here, so it's one big leg. We also had a big pullback, and then if you measure from this level to the next level up, that takes us quite a bit higher. It takes us about $526 to this level right here. So this is 526 on this move. So the question is, where are we going to head from this level or this level? And there's a couple of measurements we see on the upside here. And I'm going to scope this in. So we've got this 566, 526. So if we average those out, and that's going to bring us to the 546 level. So let's just round that up to say $550 from whatever the low is that we're looking at. So if we take this low here, okay, the first level here is approximately 1070, and if we add 500, I'm just going to do it over here. So let's say the low is 1070, and we add 500, and we said we round this out to about 550, I think is that. So we add this to 550. We can just do the math very quickly. That gives us a target zone of 1620. Now if we go to the next level here, which is a little bit higher, about $100 higher, that's 1155. So let's just do that here, 1155, and we add 550 to that. That gives us 1705. Now the big numbers are normally what gold stops at. It stopped at $1,000, as you can see here. It stopped at 1200. So chances are we're going to get close to the 1300 level before we see a pullback. Now if we see a pullback, we're going to look for a pullback, and we're going to look for support to come in somewhere between this level here, the 1226 level, the previous highs, and the highs that we saw right here, which is around about 1260. And I think that's going to be the area that we're looking at. But this market, make no doubt about it, it isn't a bull market. So let me take everything off the screen. I want to show you exactly how our trade triangles work and how you can use these in your own trading. So let's just clear the screen, very simple to do, and I'm going to scope this in a little further so you get an idea. Well, first of all, let me show you this. We're going to put our monthly trade triangles in, because it'll give you an idea of where we're long from. So just putting our monthly trade triangles in, you can see that our last long position here was $929.50. Now that would be if you're a long-term trader. Obviously it's been a phenomenal ride from this level right here to where we are today, which is way up here, and I think that's the key thing to look at. So we've had a big move, and it looks as though it is not over yet, and I think we could see further action on the upside. But this is if you're a long-term trader. If you're a long-term trader, you could just use our monthly trade triangles, which you can see right here. And you can also see our weeklies are up, and as well as our dailies. So everything's a very plus 90, which is a very strong trend. But long-term traders should just probably look at just our monthly trade triangles. Now let's take everything off the screen, and we'll put in our weekly trade triangles. Now this is obviously much more shorter-term active. You can use these in conjunction with a filtering technique with the monthlies, which means the monthlies the long-term trend, the weeklies are the timing. But you can also do that with the dailies, which we'll talk about in just a second. But let's just scope this in a little further so it makes it clearer. So you can see basically here's 1133.19, exit 1210, a nice trade. You get back in 1210. So you missed this. The great thing about trade triangles, which you'll find out, is you would have missed a lot of the pain right here. When this market pulled back down, you would have missed most of that, because the reality of going from this level here, let's say 1250, just for a number, all the way down to 1150, close to 1150, it's $100. It's a lot of pain for anybody to take who is trading in the gold market if you're trading in futures. But getting back right here at this level, which is our last buy point, at 12.10 put you in pretty much where you got out, but you didn't have possibly a margin call or any kind of pressure on you when this market was going down. So that's the good thing. Now back in the market at 12.10, the market is currently trading at, let's say, 12.79. So it's a nice profit in this. You can also look at this in our GLD, which is the ETF that we follow for gold, which has done very well for us. So let's take this off the screen and let's look at our dailies next. So take this off the screen, and I'm going to take our weeklies off and put our dailies on. Now the dailies are much more active, and this is what we've been giving you signals on our blog for the signals to buy and to sell. But you can see right here we had a signal at 12.44 to get out, not go short, but just to get out. This was quickly followed by a signal at 12.50, so it was a $6 opportunity loss, but we're long from 12.50, 35, and the market's currently trading some $28 higher, which is great. And we're doing this live, so you'll see what happens. But we may see a pullback, again, if we get back to the 1260 area, or maybe even a little closer to the 1200 area. I think that'll be an area to look to be going long. But I would use the trade triangles as our timing mechanism. That way you don't have to guess, you don't have to see what I'm thinking, but just look at the trade triangles and give you that clue as to what's going on in the marketplace. Hey, this is Adam Hewison. It's great to be back. It's great to be talking about gold.